All right, we're here at the REC booth. Again, I mentioned to you guys that we wanted to make sure we stop here because like you guys in the Toronto market, similar to the Vancouver market, you guys have a wealth of knowledge. You guys, big investment team. In fact, you work a lot with the investment clients as well and helping people across Canada. So this is Tyler. So I'm really excited. Welcome to the channel here. Tyler, I've got a few questions I've been asking experts throughout the room on what's going on in real estate in Canada. I want your perspective. What do you think is going on? How's the market? What do people need to know about it?
Sure, and thank you for having me, Cameron. So right now, what I'm finding is the market is in a turbulent period, especially in two of our markets, Vancouver and Toronto. We are seeing signs, especially with the month of inventory increasing, that we are in a depreciation cycle.
Yeah.
What have I noticed? I've noticed that it has created a lot of friction for the everyday consumer and the everyday investor entering into the market.
Yeah.
You can couple that with interest rates, Cameron. You can couple that with lack of confidence in the market, as well as rising prices. Because the other thing that I'm noticing is that our market's actually very resilient.
Yes.
Our floor is holding very strong, and time will tell to see where it actually will lie. I'm also noticing there's a large number of institutional investors who are entering into our market, and that's very significant. These are large capital-backed groups that are buying multifamily, that are buying single-family homes, and that are taking away our already limited inventory of that the everyday consumer should be looking at.
Yeah.
There is opportunity in chaos, but in saying that, Cameron, you need to have a proper plan. You need to ask yourself as an investor these critical questions so you can make the right decision.
100%.
Because I believe the next decade will not be like the one that we just saw in the greater Vancouver area as well as the greater Toronto area. For the last 10 years, we were doing this. We're closing our eyes, picking a spot on the map, entering into the market. It doesn't matter the micro market movements. It doesn't matter fundamentally what's going on there. The values are growing 8 to 12% per year by just you being in. And that, I do not believe we will see that in most markets. So we have to invest with purpose. We have to have the right team around you.
100%. I think what you said really hits home is that you have to look at the fundamentals again. I do believe you're exactly right on that. People stop looking at the fundamentals of real estate, looking for where there's industry growth, where there's job growth. Anywhere could make money when the market's hot across the board. And I mean, obviously through 2020, 2021, we were in high inflationary times, right? The government was printing money left, right, and center. The values were going up. We had super low interest rates. Buckle that with low inventory. Any investment was a slam dunk until it wasn't.
Yeah, and the market did the hardest thing, especially on the sales organization standpoint, is that in the last 10 years, the market created urgency.
Yes.
The urgency to buy, and these types of markets now are ones that I believe investors will truly build the right wealth and build the right plan because you have the ability to breathe.
Yes. And I think key that too with the fact our rates are up, right? So when you're banking on low interest rate markets and that's what was creating your cash flow, the minute there's a fluctuation in interest rates, everyone got burned. Right? Anyone who's banking on the fact that, hey, I'm going to run my numbers at a 2% interest rate and, oh, look, I'm making $100 a month cash flow. The minute that 2% goes to 6%, $100 gets eaten up real fast.
It does.
So now we're sitting there building on a better foundation because we're actually buying properties at a 5.5% or 6%, and it can only go down from there, meaning your cash flow would improve. It's not likely to go as high, so you're building on a more stable foundation.
Yeah, and it's I think a learning lesson for many investors
100%.
is to diversify, to strategically plan the payout dates on your passive stuff in your portfolio, as well as the interest rates on your active portfolio. Everything has to stagger to hedge against some of these turbulent points.
And we're talking about it with a few of the other people. At the end of the day, real estate's a long-term play. And I think too many investors focused on the short term. Right, they were trying.
Well, that's because they made $100,000 a year,
but they felt they had to cash it out. Right, instead of just letting that even compound further. So if investors start thinking,
that's a good point.
Right, $100 grand, great. Well, 6, 7, 8, 9, 10 years from now, that could be 300, 400, 500.
That's right.
Right, so people are focusing too much on the short term. Now we're heading into 2025. We're in quarter 4 right now of 2024. what are some of your predictions, for the real estate market in Greater Toronto and in Canada in general as we head in? Now, again, we don't have a crystal ball. Anything can change between, we've got elections coming up down the States, we've got provincial election happening. Anything could change, but what are your thoughts as we head into the new year, and what's some of the advice you're giving to clients?
Yeah, and that's a great question, Cameron. I'm really looking forward to analyzing the market and seeing what's happen because, or what will happen, because no one does have a crystal ball. But my predictions is that for the next year, 12 months, we will start to see interest rates going down a little bit, but I don't think that will get the majority of consumers into the market and entering at that point. I think that's going to happen starting in 2017, mid-2027, sorry.
We're
going back into a good one. Mid-2027,
Yeah.
in fact, probably earlier to the late 2027, early 2028 is when we're starting to see this pressure happen again. But for the immediate 12 months, I think what's going to happen is we're going to see rates kind of stay the same, stagnant. Yeah. I'm really looking forward to analyzing the condo sector specifically. We have in the GTA about 7.5 months of open inventory. That's not including developers inventory that's not posted. I want to see what's going to happen there. Can investors hold on? What's going to happen once rates lower and it gets a little bit more affordable? So I believe it's going to stay stagnant again. And
but you know what? There's nothing wrong with that.
No,
because when you're getting in now, you can actually make an offer, negotiate, work on the fundamentals, and analyze your property, and then sit on it.
It's funny you said that because what's happening in Vancouver and Toronto is not what's happening in other parts of the country.
Not.
And what's happening, for example, in Calgary and Edmonton, I was speaking at an event there last weekend, so it's fresh in my mind, is they're currently experiencing rapid appreciation.
Of course.
So they're in an appreciation cycle, whereas we seem to be in a depreciation cycle of sorts. And what I spoke to those investors about, because they're not used to those types of conditions that we are as investment advisors in a hot market, I tried to talk about ways to put your best foot forward, because there will be a point that the market is now urgent, which it is there, and you're going to make a fast decision, but maybe not a right decision.
Correct.
So how do you find the right opportunities that are for you, or that are right for you?
And that really brings me to a point, and I've talked about it on this channel, I've talked about it a lot, is that we don't have a Canadian real estate market. Correct. Right? Because what's happening in Toronto and Vancouver, our markets do operate similarly, just due to the type of market that we're in, traditionally condo markets, higher populations, things like that. But when you start talking about how Alberta's having a bit of a bigger boom than we're having, we're in a bit of a slum, that means that there's no Canadian market. Oh, yeah. When you see the news saying the Canadian real estate, well, we have submarkets. And within the submarkets, we have even lower submarkets. Just in Toronto alone, you've got the different areas of Toronto. Then in those different areas, you've got detached properties versus townhouses. Condos could be 1 bedroom versus studio versus 2 bedroom. Yeah. All of them move independently, and that's where having experts like Tyler here is absolutely key to be able to analyze for your property portfolios and make sure you're setting it up the right way.
That's right. Yeah.
Awesome. Well, hey, I appreciate it. As always, we really love REC out in BC. You guys are doing a great job, and keep educating people. You guys are great content.
And make sure to follow Cameron. If you're watching this right now and you don't hit that subscribe button, what are we doing?
No, I appreciate it. Okay, quick question to wrap it up. Where do they find you?
Oh, yeah. You can follow me on Instagram at Tyler Walbourne.
All right. Appreciate it, buddy.
Thank you.
Cheers. And because we are at the REC booth, we got to love all these guys. I got to say hi to Luke here quickly because it's been a long time. Brother, how you doing, man?
What are we doing here?
We're just saying hi, seeing what's going on in REC land.
All right,
talk to me what's going on.
I'll talk to you about anything as long as I don't incriminate myself.
All right, so what are you doing underground these days? I'm just kidding. Talk to me about what's happening at REC. What are you guys working on these days?
Right now, just today here at the Keyspire Conference, we launched this project called Birchley Park. It's a new opportunity that we're excited to bring because of the additional incentives that we had worked for. We actually had to grind with the developer. We had to negotiate for these incentives, and we were able to make it happen. So
love it.
We're excited.
I think there's an opportunity in the market right now because back when it was super hot and development sold out in a weekend, you couldn't grind and get those incentives. Now you're able to bring these to investors because the market's changed, right?
Absolutely, because obviously sales volume across the board has slowed down. Yeah. We have a little bit of leverage now, right? As with any other negotiation. Scenario. So here we were able to negotiate for a couple of things. One, a rental guarantee in writing.
That's fantastic, yeah.
So on a Toronto proper condo, we're actually cash flowing.
Love it.
We never hear that.
No.
Down payment, only 5% needed. ridiculous. Just to
Absolutely
start,
ridiculous.
5% needed, and obviously a
And
handful of other
that's
things.
until
but
closing.
5% now, 5% in a year from now, but
Okay.
nothing else
Well,
until
still,
closing.
I mean, so you're spreading out your deposit over a year now. You're not having to put all that capital and tying it up all at once. So
Yeah,
that's a great incentive. I
Yeah.
mean, anytime you can spread your payments, it lets you do other things with your capital and continue to grow your portfolio.
Yeah,
right?
that's
So-
absolutely it. And closing is in 2028 or 9. So it gives us a long runway to let market recover.
Dynamics change
Yeah.
and everything like that. Awesome. What are your thoughts going into 2025? What are some of your predictions?
You know, all 5 major banks have the same predictions, so I'm on board with them. They're all they're all optimistic about the fact that rates are coming down.
Yeah.
They're targeting around 3.5 by November of next year. So I'm pretty much in alignment with them there. And because of that, I'm bullish.
Yeah.
I'm bullish and I'm optimistic.
Awesome. Where do they find you on social, man?
Instagram, you can follow me at Luc Lising, LucLising.
All right, brother. Appreciate it.
Thank
Good
you,
seeing
bro.
you,
Good to
man.
see you as
You
always.
bet. Absolutely.